Kitco Mining special coverage of the Mining Forum Americas is brought to you by Metallo Royalty and Streaming.
Fourmile is going sky high. Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 Mining Forum Americas in Colorado Springs. Joining me today is Mark Bristow, President and CEO of Barrick Mining. Mark, welcome back to Kitco.
Thank you, Paul. Nice to be here.
You completely ripped up my plans this morning, Mark, by putting out another great press release. This one was talking about a PEA, preliminary economic assessment, on your Fourmile deposit in Nevada. The plan there is to produce up to 750,000 ounces a year at an estimated all-in sustaining cost of up to $750 per ounce for 25 years following an initial capital investment of about $1.7 billion. And if that's not all, you're increasing the drilling to potentially double the high-grade resource in the not-too-distant future. Wow, congratulations. This is very much a standout project, and the numbers you've put out really cement that.
Yes, I do.
Talk me through some of this. This is you talk a lot about tier one assets, the need to explore, to develop and find and develop tier one assets. This really seems to be the confluence of a lot of your different strategies and thoughts really sort of coming together in one project.
Yes, and I think, Paul, the important thing in mining, we've seen with the rising gold price lots of mergers. That increases the combined company's ability to produce more gold, but it doesn't give extensions to the life. And that's a real issue, is that, we go back to 2011, a year and a half, and talk about it. There was a lot of mergers then, but in 2015, just 4 years later, the whole industry was in disarray because there was a correction in the gold price. And so, what we set out to do back in 2019 is not only fix Barrick as a business, but to really rebuild its platform, because we had a foundation of high quality assets at the time. And Fourmile was recognized then. We didn't have a lot of information, but we had enough to believe that this had real potential. And so we kept it out of the Nevada joint venture, but we did reach an agreement with Newmont, our partners, on how we would formulaically put it back into the joint venture. And for us to do that, we need to be able to prove the value and the viability. The PEA update today really is just to point to the market that this is an extremely viable project. Whichever way you cut it, we're at the point where we can safely say this is a world-class, tier one asset in the making. And, I've often said, when you hit world-class assets, you don't have to send the boreholes away for assay. You see it. You see the mineralization. And we're talking about intersections of over 100 meters at over 100 grams a ton, multi-100 gram ton intersections. When you put it all together, our current geologists' estimates is it's going to be around 16 grams a ton. But we are intersecting really multi-ounce intersections across the 4 mile footprint.
Now, you're a geologist, Mark. Do you sort of get excited seeing those kind of high-grade intercepts?
I've always said you can never put gold in the ground. You've got to find it. And when you find these sort of deposits, they make create an enormous amount of value. And, we've had a couple in my career, and this one is really positioned to really take its own place in the history of discoveries in the industry.
Now, you mentioned about Nevada gold mines. Fourmile is adjacent to the Gold Rush mine, which is within Nevada gold mines. Under the agreement, Fourmile can be vended into that. Now that you've got the PEA, what does that do potentially for the timeline of vending it in, or is there still much more distance Barrick can carry it separately?
So we put the release out this morning, and along with that release on our website is a full deck, a presentation deck with a timeline and how we intend to complete the feasibility study and meet the requirements of being able to put it into the joint venture. And to be able to put it in the joint venture, we have to demonstrate that it will make a 15% internal real rate of return at a specific blended gold price, looking at back looking and the spot, and it already does that. So that's not a hurdle to pass. The model, the formula provides for us to, with our partners, agree on an independent valuator. We will value the Fourmile project on what we call a full market value, not a discounted cash flow value. So it has multiples and recognizes its upside potential, etc. And also part of that valuation is that we will add back the cost that we spend to take it to that position to be able to vend it into the joint venture. And at that point, it's an automatic put to the joint venture. Newmont needs to decide whether it's going to keep its shareholding in the joint venture by paying us the cash portion for their portion or the percentage of Fourmile going into the Nevada gold mines, or they have to dilute. There's no other option.
Now, Mark, we've spoken a lot over the years about the reserve price, the gold reserve price you use to sort of base your reserves on, the price used in the mine plan. With gold up around $3,700 per ounce, are your attitudes to that changing both for Barrick as a whole, and as you're looking at possibly vending this project into Nevada gold mines, obviously a higher gold price in the mine plan you're using there potentially translates into a much bigger ticket price for Barrick to benefit from Nevada gold mines?
Yes, and I think that's a very valid statement. What isn't that, we are intending to use $1,500 gold price for our reserve calculations for the next year, for this year's reserve declaration. Why? Because we've always said we use the gold price that links to the geology and the input costs. And at $1,500, we capture all the ounces in our ore bodies, because our ore bodies are not marginal, they are world-class in nature. And so if, just to try and explain, if we use $1,700, for instance, we would have to add waste, because at $1,500 we get to the edge of the ore body. So we take all the gold that's in our resource at $1,500. $1,700 we use at the moment, and we're probably going to use it much higher. $1,900, is what we use for resources. And the reason we have a higher number for resources is we just want to protect the footprint and not put infrastructure into places where potentially we might have ore bodies. That's the way we work on it.
Okay, as Fourmile moves forward and you start looking at the sort of permitting scenario there, how has the permitting environment changed under the Trump administration? The Trump administration's made a lot of comments about the need to accelerate permitting of mining projects. It's looking to do various different things. I understand there's a bill that's being prepared to be put before Congress to really reduce the time to a more manageable level, and of course reform the NEPA permitting process. What are some of the things you're hearing now?
So I think, Paul, it's worth noting that we've recently permitted 2 mines in Nevada, Gold Rush, which is a very large mine, and recently Robertson, both under the Biden administration, both within very short time frames. And so the point I'm making is that if you do it right and you have relationships and you can demonstrate real contribution to the state, the communities, and the nation, you get your permits done. And again, going back to the previous Trump administration, there was a real push to shorten the permitting time, not to try and make it easier, just to stop frustration. And the biggest challenge in the US is the litigation that frustrates a permit, not the quality of the regulations. And there's no intention to change that. And we apply those regulations, by the way. They're the best in the world across all our projects around the world. And so that is definitely the legislation that you've been referring to is coming, to be able to take away that ability for unrelated parties who are just anti-mining to frustrate a process. On Fourmile, it's another unique situation because we don't have to permit a new mine. We are going to have to initially just permit the access of the portals. And that is on a already old permitted piece of ground that is disturbed. And the other area we will utilize as part of the Fourmile project is an old roaster permit. So both, we're not trying to permit new pristine areas. They are very much part of the Nevada Gold Mines mining footprint.
Okay. I think I should just add to that when there are challenges to permits, it's usually people challenging the authority that issues the permit and not the company that's applied for it. Okay. Your business in North America continues to evolve. In April, you sold your 50% interest in the Donlin Gold project in Alaska for over $1 billion in cash. Now, just a week or so ago, you announced you're selling Hemlo in Canada for about $1 billion. Barrick was originally called American Barrick Resources, so the company's moved quite a way away from its roots. And now in North America, you just have the Fourmile and some other properties in Nevada, and of course the Nevada Gold Mines joint venture. To what extent or not is this move away from the roots? Is this a critical thing? There's been several mines, large gold mines, built in Canada over the past few years. Is Barrick really stepping away from North America? Are you looking to step back in at some point in the future?
No, I think if you look at the way we've focused Barrick's strategy going back to 2019 was we want to focus on tier one assets. We have had to deal with the West African situation. We are busy selling Tongon at the moment. There's work continuing to find a solution in Mali. But if you extract that, West Africa, and you look at our non-core sales program that's rolling out, we're really focusing in Barrick into certain areas, and they're driven by two things. First of all, when we finish this strategy, we'll be about 65 to 75% North American. So that's important. It's not what people perceive. On top of that, the remaining portfolio are high quality, low capital intensity investments with big returns and margins. And that's always been my philosophy, as you know, in Rand Gold, is that you can manage going into high risk regions if you have high returns. That makes sense. And so when you look at Barrick going forward, it's going to be overweight in North America, and the remaining portfolio are going to be big, high value assets that are materially important for our host countries and offer significant returns to our owners.
Mark, you obviously think a lot about many, many different things, but the high returns of some of these projects, will you see the valuation of those negated or discounted away by sort of country risk factors?
No, because at the end of the day, the bottom line counts. That's always the case. And I'll give you a couple of examples. Pueblo Viejo in the Dominican Republic, when we started out, we didn't have a horizon past the middle of this decade. We've now added 15 million ounces and 20 years of life. That's a world-class, tier one, low-cost asset that's going to produce dividends and returns for 20 years. That's what you want in the mining industry. If you look at Lemoana, it's a self-funding expansion that makes, on a accretive basis, more than 20% return IRR, and is self-funded by the current stream at Lemoana. And so its capital intensity for Barrick is nearly zero. We don't have to write out a check. And if you take Reko, for $1.75 billion, we're going to own 50% of one of the world's largest undeveloped gold and copper miners, and it's right in the middle of development now. And I'll put it in perspective. BHP bought 50% of Lundin Mining, Filo, for $2 billion just to get a seat at the table. They've still got to finish the feasibility study, make the construction, pay for the capital. We've already done that. We didn't pay for Reko. And so people don't see that, and we need to do a better job of explaining that our capital intensity, whether it's Fourmile, of course, which is only a 1.7 billion investment, because all it is development. It's no capital.
You can pay for that, 3 or 4 times in cash at the moment, can't you? Yeah. Let's talk a little bit more about Reko. You're planning to bring that into production in 2028. Last weekend, news out of Pakistan about a $350 million rail link to Port Qasim. How much of that cost pertains to Barrick, and what will the rail link do for the project?
So I think you're talking about the Asia Development Bank announcement, which is partly the Asia Development Bank investment into the lending group, and partly the Asia Development Bank replacing some Belt and Road Chinese commitments in upgrading the rail link that you refer to. And there's more to come. My encouragement to the Pakistan government is we're developing this massive project. It's a driver of the economy. Let's focus on the infrastructure that's already there and upgrade it, rather than trying to build more infrastructure. And there's plenty of really significant and appropriate infrastructure, including 2 rail links all the way down to Port Qasim and Port Qasim itself. And so that's our focus. And Reko is responsible for the spur, which is a 90-kilometer spur from the main Trans-Asian railway line that starts in Karachi, goes all the way to Turkey, and then we are working with private investors to upgrade the rolling stock to support the supply and also the transport of the concentrate back to the port. The total first phase capital tag is around $6.5 billion. And the second phase is about $3.5 billion. The reason is the first phase carries all the infrastructure, establishment, the power, etc., the rail links and so on. And it's important, Paul, to explain that of that $3.5 billion, we are working to borrow $3.5 billion, of that $6.5 billion. And through a lending group, it's 11 different sovereign-style lenders out of the G7 countries and focused on the Western economies. And it's like, and the lead is IFC World Bank, and then Asia Development Bank. There's about $1 billion from those 3. They've all been approved from their boards, and that's what you've been seeing coming into the public domain. We have significant investment, dominant investment out of the United States with Exim and KFC, and then it's Germany, Canada, some of the Scandinavian countries, JPEC out of Japan, and included in that lending group are a bunch of European credit guarantee what do you say?
Export credit company?
Export credit style national initiatives. And that has been supported by over $1 billion of commitments from commercial banks. And that brings commercial banking, because they guarantee the political risk, 100%, and 90% of the commercial risk. And so the global commercial banks have committed to fund alongside these government institutions. So it's 12-year money. It has a big impact on the returns because of the cost of that money, in that you gear the returns, and it's a very important political insurance, because all of these, particularly the World Bank, IFC, the World Bank institutions, are big creditors of Pakistan. And Pakistan is a serious country in the world, with interest both from the Asian part of the world, the East, and the West. And so it's not a sort of West African Mali. It's a serious...
It's not Barrick on its own, yeah. No. Now, in terms of the sort of political insurance, I understand you were you were aiming to get Saudi Arabia to co-invest in the project as well, but I understand that they decided to step back. Why is that? Why isn't Saudi Arabia looking to...
Well, early on there was lots of concern about risk. That was before we started converting the preliminary economic assessment based on the 2013 feasibility study, along with our partners in Pakistan. And we were negotiating the terms of this partnership with Pakistan. And as you know, the partnership concluded with Barrick owning 50% and Pakistan Inc. Incorporated owning 50%, of which 25% is allocated to Balochistan and is fully funded, guaranteed by the Pakistan government. The other 25% is owned by state-owned enterprises, which have solid US dollar-based balance sheets. And during that period, through the pre-feasibility study and final feasibility study, there was an interest indicated from Saudi Arabia to be part of that. There was always we were always moving the value of the project ahead of where the conversations were between Pakistan and Saudi Arabia, and we very quickly got to a point where we now, by the end of this year, we will have spent as owners $800 million in Reko, and Pakistan Inc. Incorporated has paid their full share with their own money. So, and now we have the final lending closeout, which will then fully fund the phase 1, and that's all we need because phase 2 is self-funding. And so there's no more requirement. The project is banked. It's fully funded to this date. We didn't run into any risk of funding. We've agreed that we are separate. So Pakistan has been acknowledged as a independent owner for 50% of the project, and we as the other 50%, and it's not joint and several.
For the second $3.5 billion for phase 2, I believe the aim is to fund that from cash flow, but given that Saudi Arabia didn't participate in phase 1, are you perhaps going to review that to potentially get them involved in phase 2?
Sure, they've actually indicated their interest, and they're particularly interested in offtake. And again, as you can imagine, so are all the lenders that have stepped forward on the current project. So the next opportunity to get additional to get access to concentrate offtake is phase 2, and phase 2 will follow the completion of phase 1 by 3 years, and definitely I'm sure there will be opportunities for new entries into the offtake of agreements for the project.
Okay. You and we spoke earlier this year about some of the security and safety risks, the potential for that in Balochistan. There's been articles published most recently in The Diplomat last week or two about the violent insurgency in Balochistan, the Balochistan Liberation Army, and also the Baloch Raja Ajo Sangha. It's a new group to me. With the news, what you're talking about, the railway, the rail spur, the 90-kilometre rail spur, I can't help but be reminded about T.E. Lawrence's Seven Pillars of Wisdom book, the vulnerability of railroads to insurgencies. How can you and or the government of Pakistan, Balochistan, ensure the safety of a rail link for decades?
So we've got multiple rail links, which are helpful, but I think it's worth taking a step back. We've got these big government institution lending bodies that are involved in committing investments into Pakistan and particularly the Balochistan area, and they've all been over this project with a fine-tooth comb, both on the technical side, the geological side, the social baseline side. Remember, this project is, for all intents and purposes, fully permitted at the highest level of standard. And then everyone is mindful of security. And so we have a security strategy. I think it's worth, and not to dilute the importance of security for this project, but everyone has had their security advisors and consultants crawl over the project and the way we manage that security. What makes this easier is it's located in a low density part of Balochistan and in a desert, low altitude too. So comparing it, if you compared Philo as one of the top undeveloped copper projects in the world today, or Resolution, those projects on the risk side are much higher risk on every other aspect except security than Reko. And Reko has there's not a lot of people in the footprint. We are developing the project so there will be a fly-in or drive-in, drive-out system. By the end of this year, we'll have 10,000 beds inside the fence. And our workforce will be largely located at Nonkodi, which is about 100 kilometers, little more, away from the mine. And we'll build that community because our intention is to employ as much from the local people as we can. And then the shifts will be staggered, and they will drive in for their 2 or 2.5 or 3 weeks work and then go back to their families like you would do in northern Canada or so. And so that way we can manage that security. We've had very little security issues around the mine or even between the mine and the main centers. And again, when we talk to people, you know me, Paul, the world's changing. And to change it, you need investment. This investment will materially change the Pakistan economy. And what we are doing is addressing one of the key issues that the Balochistan people have, and that is that they've been neglected when it comes to participating in their endowment, their provincial endowment, their province's endowment. And we are really focusing on that, whether we have an international student program where we have some of the top students, Balochistan students from all the universities in Pakistan. We've selected just under 50 from 5,000 more and more applicants, and they're working in our operations around the world. And they'll come back as the foundation of the future leadership of this mine. And then we've built technicons. We're adding more to that because we give the Baloch people the skills to be able to participate competitively in the workforce as we grow the mine.
You shared some photographs of me earlier this year, and the pre-development work is quite extensive. I think that's something that not a lot of people realise. Let's finish off with a quick trip to Chile, Mark, if that's possible. In August, you announced you would sell the Alturas gold-silver project in the Indio Belt. You retain a 50% joint venture interest in the Zaldivar mine. You have JV interest in Norte Abierto project, and at the Pascualama project, which is now called El Alto, you're still looking at getting a development opportunity there. What's your overall strategy in Chile?
First of all, Chile is a place where when I took the helm at Barrick, it had a lot of liabilities and not a clear way forward. I can safely say that we have addressed those and rebuilt our license to operate within that country. It is a foundational destination if you want to be a miner in South America, so we recognize that. And El Alto is, we're closing down the old Pascua project because it doesn't work. And we are re-establishing a different focus, and we are well advanced in preliminary evaluation of that, the potential of a new look at Pascua, a new way of developing it, addressing the concerns of the past, and we will start communicating that with our owners soon. And to do that, we've done a lot of work using historical information, historical boreholes, some of the old samples, but we need access to fresh geological samples. And so we have recently applied for permits to be able to initiate a fresh drilling program to be able to complete a preliminary economic assessment based on some really valid information. And we continue to look for opportunities up and down the Andes on the Chile side, as we do in Peru, which is also a very important destination for us, and of course linking our current investments in Argentina in this transnational deal that was originally the base for Pascua-Lama. That's something that is attractive to us as well.
A lot going on as always, Mark. Congratulations to Fourmile, and thank you very much for joining us today.
Thank you for your time, Paul.
And we have a lot more to come from the 2025 Mining Forum Americas, so hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining special coverage of the Mining Forum Americas is brought to you by Metallo Royalty and Streaming.